Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Thursday, August 18th, 2016, and this is the Daily Report for Gold and Silver. We have a nice moderate rally in the precious metals markets, with gold trading up over 0.5%, 0.65% in terms of the net change in COMEX gold. Currently trading 1357.50. The high today has been 61.5, and the low today 1351.20. As I said, putting it up about $8 on the day. Now, really opposite from what we saw yesterday, where spot gold was doing roughly twice as well in terms of the net change on the day as December COMEX. We've got the opposite, so they're kind of equalizing themselves back out. 1352.50, that's spot gold with a low of 46.29 and a high of 56.09. Lastly, silver, and we are looking at spot up about 0.5%, just shy of 0.5% at 1973 with a low of 63 and a high of 93 on the day. Let's take a look at our first chart. So traders, as I said, fairly decent gain on the day, currently trading up about $8. Of course, we are looking at December futures right now, COMEX futures. And when we do that, I had sent out a trade update email yesterday, and this was the chart that I included. I had the candle body sizes widened considerably just for illustration purpose. But my point was that we had this sizable breakout that came in above this upper level resistance line. Of course, this resistance line is created simply by looking at the highs of these candles. As the market comes down, you go from high to high, and that's going to give you your angle. The lower end is our support line. That, of course, is created by kind of lining up the lows that come in on these bodies and sometimes the tails. And so what we're getting is this compression triangle. The idea behind a compression triangle, traders, is that as it trades through this range, and most importantly, as the actual range begins to compress, that builds energy up as it compresses, and then finally you'll get some sort of dynamic release. And typically when you get that release, when it breaks either above or below the compression triangle, that energy is released and you get a sizable pop in the market in many occasions, and that's what we kind of look for. Well, I thought we had the potential to see that last night in trading activity. As you can see, market absolutely popped up, but that was not to be sustained during the trading range and trading day. It came back into the actual triangle itself, but managed to close above it, and to me, that speaks spades in terms of importance and the fact that we have, I believe, built a base and solid support in the marketplace over this last low. And I also believe that as we approach this apex, and we're almost there, we will get that spike. And as you know, I believe that that breakout or spike will be to the upside, because typically when you get a compression triangle breakout, and the market does actually break one way or the other, it will typically break to the predominant trend direction. And when we look at this market, we can absolutely see that the prominent trend direction has been higher. So traders, obviously, we have been in this long position now since the 9th of August. We bought in roughly at 1354. Market's finally a couple of dollars above our actual entry price. If we take a look at the dynamics of this most recent trade, market hit this top back here, which matched our top here, which came in at around 1370 and change. As the market came down, we had this doji. We then had a green candle, which gave us a 3-river morning star variation. We received confirmation, although meek confirmation, the following day, and that's how we entered right at this price point. Market for the 2 days following us putting the trade on really had to trade back to this basic level of support, and we've got the support level pegged pretty much at 1335. Our stops are below that, and so We had 2 days of the market really consolidating, and then we had our base form. We had a nice spike up about 3 days ago, but then we had this low retested just yesterday, and then today we've got this decent upside move. Now, the range is absolutely compressing. We've talked about that, and you can absolutely see that when we simply look at it this way. At the same time, we can see something that I believe is the most important characteristic of the market, and that is the series of highs and lows that we see. So the market makes an all-time historical low, not a record low, but a historical low, because it's the lowest that gold has been at ever since trading to 1900 plus per ounce, comes down end of last year, beginning of this year, tests this 1040. Then we have a series of market moves in which we have a rally, we have our retracement, so we get our high, which obviously is higher than the last high. We then get the market coming down with a low, and the low is higher than the last low. It was an irregular, so we did get another high that was above the former high. We then got a low that was higher. So we're getting this series of higher highs and higher lows, which is beautiful because that's how a market moves up. And so when we got to this point in, mid-July, everything was kind of matching up, and then we went into rally mode. But lo and behold, for the first time, really since this larger rally began, we actually saw some real headwinds on a technical basis coming in at around 1275, 1276 in that area. And so although we had these series of higher lows and higher highs, we did not get that on this last high right in here. So market then comes back down, and at least for now, in other words, if this particular area holds, which I certainly believe it will, we will get another higher low, but we have to make a higher high. We've got to take this particular price point out on a technical basis for our models to really indicate that we are headed to those higher prices. And you know where my upside benchmarks are, but before we hit those benchmarks, what is critical absolutely is that we take out this high at around 1380. Traders, obviously, maintain your current long position. Traders, maintain your current stop. We haven't moved that yet. I really want to get some room between where the market is at and where we entered before we actually go in and raise the stop. So traders, silver has been really an interesting mix of incredible spikes to the upside, and then a dynamic point in the market in which it really just trades sideways. Trading sideways with silver is not within its initial character. In other words, we see silver have really dramatic moves, whether they're dramatic moves down or dramatic moves up. This last rally, of course, silver certainly outperformed gold in terms of the market move, considering that gold went from 1050 up to the highs that we just pointed out at 1360. If you look at the percentage gain between that and $14 and say $21, the difference in terms of price change is dramatic in silver, much more dramatic than in gold. However, unlike what we have seen lately, we've hit this dramatic kind of sideways trading activity. Now, this is a weekly chart, first of all, but even with the weekly, you've got alternating candle color. Last 2 weeks, you absolutely get this uncertainty in the market. You've got almost these pure dojis on a weekly candle. And so what that tells me is that the market's absolutely consolidating. I would think it's actually top heavy, but I also believe that silver will trade in tandem with gold, and I'm expecting gold to rise, so therefore I'm expecting silver to rise. On a daily chart, you can absolutely see what we're talking about, this kind of narrow defined range in which we have lows right above 1900, call it 1920, and then highs right below $21. Traders who are long silver right now, as I said, you'll always want to run in tandem with the calls that we do in gold. Whether or not we have a specific silver trade, we recommend you buy when we buy gold, you sell when we sell gold. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.